Malcolm, how are we going to know if this is fading in August? Because, I mean, you don't want to wait until you lose everything from July if you were in and you're feeling really smart right now. You added to your Microsoft position after their earnings report. Why'd you do that? And yet you think that we're not in the clear market-wise?
Yeah, so two completely separate reasons, right? So I added to my Microsoft position basically because they came out and said, similar to what Shannon just said, more of the same, right? They said, we expect next quarter to be just as strong as this past quarter, and reiterating the same guidance from 3 months ago. Or, you know, you had Apple who came out and said, we sold even more iPhones than we expected, and we see no evidence that iPhone sales were affected by what's going on in the broader economy. When you have the leaders of the biggest, most influential tech names coming out and making statements like that, it's easy to get excited and even conflate those outliers with the broader economy. In fact, we're on pace, as you guys have been talking about, for the best month in probably a couple of years. I can't remember the exact time frame. And my concern now is that this week's rally might be a little bit of a trap. But separately from that, I see Microsoft as being, like I said, a bit of an outlier, where their cloud business now having something like $100 million of projected run over the next 4 quarters, which is their fiscal year. That alone tells me that Microsoft is on pace to grow sort of underneath the surface, regardless of what happens in the broader markets over the next couple of months, while we're waiting to see whether inflation will actually prove that it's cooled or if it stays pretty steady.
So when investors are looking for places that are relatively protected, okay. Now let's talk some catalysts, I guess, for stock moves that we might see in August and beyond. Malcolm, you say to expect more cloud M&A. You say that, and then at the same time, we got headlines about the FTC, Lina Khan taking on Facebook, trying to buy a little tiny company in VR, and the FTC regulators pushing back against that. Who's going to buy these companies cloud-wise? Does it have to be private equity at this point? Or do these companies who did so well this earnings season, big as they are they actually going to be able to spend that cash?
Yeah, Facebook's a little bit of an outlier. They're on everybody's hit list, if you will. They're an easy target just by name. But I think, in the cloud space, some of the more well-diversified companies like a Salesforce or an IBM, I mentioned Microsoft, I think anybody who's not Amazon Web Services, basically, might start to acquire some smaller single product companies and then add them to their ecosystem as a means to growing their market share in the cloud more quickly. And I'm thinking about names like, a DigitalOcean, a Databricks, Confluent, Cohesity. There's a ton of these smaller players out there which are all now well off their 2021 highs and might be willing to deal a little bit more, because the recent uptick in demand for cloud solutions is because large companies are now migrating their entire tech stack to the cloud rather than just one-off applications here and there, with the majority remaining on premises. And so it's like they're finally coming to accept that their workforce is never going to return to the office in the numbers they had hoped. And so now there's this overwhelming demand for cloud solutions, especially from companies looking to diversify providers and maybe go multi-cloud as a way to prevent blackouts and potential price gouging. And so Lina Khan might have the ability to step in, with a name like a Facebook that already is public enemy number one. But a lot of these other companies, like the ones I just named, are ones that consumers don't really recognize by name anyway. It's not going to get the political headlines that would make that worth, the effort of going after blocking something like that. Again, unless it's Amazon.
I should be calling it Meta, not Facebook. The ticker's Meta now. It goes by Meta. I knew it back in the day on the block when it just went by Facebook. But Shannon, you agree? You were nodding your head through a lot of that.
Yeah, I couldn't agree more. I think that cloud is here to stay. And frankly, I think that there are a number of companies, not just providing cloud software, but a number of companies that are involved in upgrading all of these servers, the infrastructure that goes behind the cloud. I think that one of the things that is a misconception is that enterprise spending is going to start to slow down as we're entering into a more difficult patch. However, it is clear that companies need to be spending to move more offsite onto the cloud so that they can support these hybrid working environments. We've hired a lot of workers, across the United States. All of these large companies have done that. And so being able to use a chassis like Salesforce, being able to bolt those on. I do think that acquisitions are going to be a little bit more difficult, particularly for the big heavies, but I do think that M&A is going to be much more important over the next 12 months. It's going to be a lot less, there's going to be a lot more scrutiny, I think, from the PE universe in terms of deals. And so I think M&A is going to have to pick up some of that slack.
Okay, Malcolm, last word. But what about a month ago when almost everything was cheaper? There were so many people saying, hey, if it doesn't have profits, I don't want to touch it. It's all about free cash flow. A lot of these growth names, a lot of these cloud names that are potential M&A targets, they're the very stuff that a lot of people were saying don't touch it a month ago when it was cheap. Now it's gone up and it could go up further. So what's the rule book you go by in deciding what quality means now?
Well, as I said, a lot of those companies we're talking about, their share prices are 70, 80, maybe 90% off their November 21 highs. And so they're more willing to deal than they would have been back then if they had been approached by somebody like a Salesforce. At the same time, to your point, I don't think that necessarily means that the product that they offer, their single focused product, is any less quality than it was before. It's just that promising us growth 5 years from now isn't going to cut it in the same way that it did back in November 2021 and the months prior to it. And so I think it's more a focus of let's get something out of this name while we can. Let's find a happy home while we can, more so than it is the product itself is not of quality or the product itself is of lesser quality than it was before. It's just not as expensive. It's not as frothy is the better word to use.
Okay, certainly not. We got a little bit of excitement happening in the market, certainly in July and the way we close today. Greg, Shannon, Malcolm, thank you.